Hello, everyone. Hello again. And thank you so much for coming on to our educational series again. Today, it's all about the area that means so much to all of us. It's about our money. All right. And as I would share, of course, I am Winnie Benjamin, and I am a business performance advisor at Stewardship Masters International, and we are a white labeling company that come in under a company's umbrella and help to expand them, give them capacity, and make them larger than life. And one of the areas that we operate in is strategies, right? So you want to have talent strategies, product and service strategies, and of course, there's so many other areas of performance that's very important in the area of operations. And the biggest core of it, where are we going? It's building our money. Money has a purpose. It's a tool. It's not a God. Some people say it's a God, but it's a tool, right? And the game of life is try to make as much money as possible so that you can impact your life and lives of others around. And so our loving government plays games with tell us let's play the game. Okay, you have no purpose for that money, give it to me because I am able to do more with it. So your job, our job, is to find out how we can tell the government that's okay, we can keep all of it and do good with it. And today we have this talk, fireside chat, with two powerful guys that I definitely can edify and close my eyes and give them over to you because they know their stuff in all things money and its impact. Our topic today is that it's like a spin to create some form of excitement, right? You and money go to work. Which one of you will pay taxes? Of course, money will pay its taxes. It goes to work and it pays its taxes too. You go to work, you pay your taxes. And so, yes, all of that combined, we are going to talk about that. So let's talk about our first person that I am bringing to the table, and I'll show you a little bit about him. That's Alan Shoenberger. And Shoenberger is a comprehensive financial planning investigator. He doesn't just dish out canned advice. Alan will dig, research, analyze, and ask questions until he's able to solve his client's financial puzzle. For nearly 30 years, Alan has helped startups and existing small business owners create and manage their budgets, analyze their financial data, and plan for the future. Allen's expertise in financial strategy has been quoted in articles in the US News and World Report and Business Insider. His innate logic, dedication, and critical thinking skills have unlocked many financial mysteries. Allen began his career working in accounting and finance and quickly worked his way up to director of finance, a position he held for 20 years before becoming a certified financial planner in 2010. Allen is also a certified plan fiduciary advisor, which gives him the expertise to design and manage retirement plans such as 401k plans. He's also a certified exit planning advisor. Allen is aware of the major impact financial planning has on his clients' lives today and for many years to come. And that is what inspires him to continue educating people and business owners about their finances and helping them achieve their financial goals. As a matter of fact, that is one of the main reasons that Stewardship Masters has added him as one of our masters. Okay, so imagine we are stewards, right? So inside of our vault are none other than masters of their craft. And so it's an honor to have Alan among our mastery. So that's it for Alan. And now the next person we are going to talk about is and don't tell me I just lost him in my process here.
I'm right here.
All right, that's Robert, right? And so, in Robert's situation here, we're going to tell you a little bit about him. Robert is very modest. I know that. And so he doesn't like the upfront work, but you see, just the nature of his work, he doesn't mind being in the boiler room to find with a big Sherlock Holmes glass of finding where everything needs to be and where every penny ought not to be or to be. So, a little bit about Robert. He says, I share with my clients more than 25 years of experience in managing multiple audit and review engagements in various industries such as construction, moving and storage, employee benefit plans, hospitality, real estate, apparel container that I'm sorry, that's apparel, container shipping and publishing, just to name a few. My partner and I are known for our hands-on personalized service approach. Our specialties include audit, review and compilations of private enterprises, employee benefit plan audits, middle market business consulting and advising, outsourcing of accounting department functions from CFO to controller to all accounting and bookkeeping, accounting systems, evaluation and selection, tax planning and compliance. He is a partner of the Benic and Associates LLP, right here in Garden City. It's another powerful company. And I must also let you know that Alan, of course, his business is called the Endeavor Financial Planning. That's pretty much his business there. Endeavor Financial Planning LLC. And of course, he's in for the great areas now. Alan, are you actually in Staten Island? Is that where you are? The business is located, or
No, my business is in Melville.
right in Melville? I know because you're part of the island. I don't know where I got Staten Island
It's
from
okay.
on it.
I do have family on Staten Island.
Oh,
We're
that's what it
close.
is. Okay, so we are going to dive right into our questions for today, right? And I like to set the foundation of understanding, first of all, for our audience to understand actually the title, the description of the roles that you have. So, first off, we're going to talk about defining what is the role of a CPA versus a general accountant. Because somebody will say to me, "Oh, I already have an accountant," and they're good with that. So, Robert, I'm posing that question to you so that you can help our audience understand what is the main difference between the CPA and the accountant. They're both accountants, but there's got to be a significant difference between the two that impacts.
Absolutely. Well, let's start with what CPA means.
Yes.
Some people might say cut, paste, and apply, but I would like to say it's certified public accountant. And that's at the heart of the matter. The difference between an accountant and a CPA is that a CPA is licensed. He or she is licensed by the state. They had to take more education, usually about 30 credits more in education than a typical just accounting degree.
Mm-hmm.
They had to have a specific service requirement in terms of work experience, and then they have to pass a uniform exam.
Mm-hmm.
Extremely difficult.
Wow.
And where they practice, for instance, an accountant can't represent a taxpayer in front of the IRS, but a CPA can.
Mm-hmm.
An accountant can't form an opinion on the financial statements of a company, but a CPA can.
Now
That's at a high level, right?
that's important, right? Because when the IRS have you hanging out on the line to dry, and you cannot defend the reasons why you tripped up, made that horrible mistake, would the CPA be the one that can legally assist you in adjusting your error before it gets to the IRS, or beg pardon, for your error?
That's right. CPA or an attorney?
Or an
Definitely a
attorney
CPA.
can do that.
Yeah.
Wonderful. Okay.
They'll get you off that hook.
Get you off that hook, because you could be in bringing them in permanent for life. I've been down that road once before. They become your permanent partner when you mess up, because they're not letting that teeth, that gorilla lizard, that just imagine one of those I don't know, Disney movie with these big lizards and the teeth. And when I think of the RS, I see this lizard with this huge mouth and sharp teeth, and they grab a hold of you and you're done. Don't even try to get out. That's how we envision them. I know that's a terrible metaphor, but that's just how most of us feel, right?
Yeah.
Now let's jump right into, and thank you for sharing that and giving us a very, clear understanding there. Now we jump right over to Alan to talk about the fiduciary advisor, because we also hear the noise in the marketplace. I have a financial advisor, and I would say, but is he a fiduciary? Oh, they're the same. A financial advisor and a fiduciary, they're actually the same. And that's if you go in the network arena and you talking to them, Alan, please help us understand the difference.
Sure. First, thank you for having me here today, and I'm happy to be sharing the virtual stage with Rob Puerto. So yes, not all financial advisors, financial planners are created equal, so to speak.
Mm-hmm.
So first, the role of any financial advisor should be to be helping their clients develop a comprehensive financial plan, not only to meet their goals and needs today, but years on down in the future.
Yes.
And that doesn't just include investments, because that's a common misconception also. So someone hears financial advisor, financial planner, and they think all you do is spend time on investments. And that's certainly one piece of the puzzle. But a true financial advisor should be working on all pieces of the puzzle with other professionals such as Rob. So I would work with Rob on tax strategies. I might work with an estate planner to help a client develop their estate plan, because it all ties into their financial plan. And then with respect to the fiduciary, not all financial planners are fiduciary. So you want to ideally to deal with a financial advisor that is bound to a fiduciary duty, meaning they are required by law to put their client's best interests first. And the one way to find out is simply to ask them, are they a fiduciary? But you can also often tell by their business model how they're compensated. So I happen to be a fee-only financial planner, and most fee-only financial planners are either compensated on a flat fee, an hourly fee. Sometimes they charge a percentage of the assets that they're managing. But a fee-only planner usually are also fiduciaries, whereas those that aren't fiduciaries may be compensated on a commission by selling you a product, such as an investment or insurance product.
So what I'm understanding you to say, Alan, is that I might have a very ambitious, goal-oriented, revenue-desiring financial advisor that come knocking at my door, and in all of good heart, great personality, with the interest, my not knowing anything, can convince me to buy a specific instrument that may not necessarily work in my best interest, and then I am done if that was a wrong advice. So I now understand that if I'm planning to build wealth, sustainable wealth, I might really need to get a fiduciary who is not biased, that is going to be, bypassing commission. You're paying me one way or the other to look at your long-term benefit based on your lifestyle, what it is now and where you're going to go. Wonderful. Okay. Thank you, gentlemen, for setting the foundation here. So let's move on to asking, is it important that the business owner work with a financial advisor and CPA simultaneously? And if yes, why? And I'm going to tell you why I asked that question. I work mostly with create the design thinking for a startup. And one of the things that I share with them is that on startup, even before you register your company, I need to see your team. And that team needs to be a CPA. I do not say an accountant. I don't care if you're a startup and you only have $50 to your name. You will find the money to get a CPA, and there's a reason for it, right? I want them to work with a financial planner and a fiduciary. because that fiduciary, like Alan says, going to ask the deep dive questions of helping them. At that point, maybe they won't know, but he's going to form questions along with the CPA, working together as that advisory board to help that startup start and position their foundation correctly, therefore reducing expensive costs going forward, right? So for that reason, I have those two: the legal attorney, the CPA, the fiduciary, the marketing consultant slash systems individuals that, that's the CEO that's helping with the whole systems and the operations of it, and then identifying the product and service. So I tend to sell the package of the fiduciary and the CPA together. That's how I've done it. So please correct me if that positioning is incorrect, and answering that question. Is it beneficial for them to work simultaneously? Yes or no? And if it's yes, why?
I would agree with you. I think they both serve different roles, but they also work in tandem. Mm-hmm. So you think about the CPA, right? His goal is that steward of the business to make sure that they're on budget, they're profitable, they're meeting their cash flow needs, they're tax compliant. But then if you think of that startup business, well, that owner or owners, well, what are they doing with their profits? Here's where the financial advisor says, well, what are your goals? Oh, you have children, you have to save for retirement, you have to save for their college. They provide strategies, risk mitigation through insurance, proper estate plan for the future. As Alan said, he looks at that whole picture. Mm-hmm. And that's when we interface together, CPAs and financial planners, looking at both aspects.
That's powerful. Now, let me ask both of you. I don't know if the attorney needs to come in at this point, but I don't think so. I think it's still both of you. If the person sits before you and it says, hey, Alan and Robert, I want to sell cookies. I like to be like Mrs. Fields Cookies. I just want to sell cookies. And I want to retire on a yacht for the rest of my life. Which one of you will say to the new Mrs. Fields, not the old one that we all know about, if that product is the right one? Which one of you would say, based on the goals, is that, you understand where I'm going with this? It's like they just want to sell cookies at 50 cents a pop. And they saying in 20 years, I need to make X amount of money and put it in a retirement, all of the bells and whistles, and I want all of this money. Which one of you would be the one to say you may want to look at the vehicle you're using to achieve that goal? Which one of you would be the one to help them there?
I think we both potentially would.
Yeah.
Yeah. And so to more fully answer your question, it's possible an attorney might be necessary. But for me, the first thing I want to know, every business owner that's got a new great idea that's starting a business, is, do they have a business plan? Right? So have they done the research as to what the market is like for their product or service, what their competition is like, who their target market is? And there's other factors that go into a business plan. But I would want to see that they have that business plan in place first.
Because that's going to help to see where their vision is. Okay, very good. Thank you so much. Now, let me ask you another big question. And hello, Mr. Setting 007. He's saying very interesting information. Thank you so much. I know you are a business consultant, so I want you to work with these two people, these two powerful men, when you are definitely working with your clients, okay? MLA Business Advisory Group. I think that's where he's coming from. So tell us the definitions of tax evasion and tax avoidance. There are definitely a difference. Yes or no?
Oh, for sure. If you think of our tax system is rule-based, right? So federal rules, go really that yay high, and at state level and local level. And so tax avoidance is using the rules, following the rules to reduce your tax legally within the guidelines that are established by law.
Okay.
Tax evasion is through illegal means, avoiding tax or deferring income or not showing income or not reporting income.
So let me make sure of not showing income by hiding it, or those individuals who would say, I have two books. I've heard CPA said, which book are you making me work from, right? I've heard him say. So having two books falls under the category of tax evasion.
That's right.
Okay.
And it's part of a bigger area of tax fraud,
Of tax fraud.
Yeah.
Going to offshore banking areas of finding ways to leave the country with large sums of money to put it in these Swiss bank account or those offshore banking that only know you by a number. That falls also under tax evasion, or
Yes.
no?
Yes.
That's it.
Because
Wow.
there's requirements for U.S. people to report assets, bank and financial assets that they have overseas.
Mm-hmm. Mm-hmm.
And if they
Wow.
put it in a numbered account somewhere and not report it, then they're violating the law. They're
Wow.
evading.
That's powerful. I'm hoping our audience understanding this, and I'm sure there are many other ways other than the bottom line is tax evasion is knowingly know that you have money that's subject to taxation, but you have found convenient ways to shelter it. Now, let me go to Alan in this case, because some people will say, I have $100 million in liquid cash, and Uncle Sam wants 65 million of it in taxes. So they would say to the fiduciary, is it not tax evasion by my taking that money and packing it away here and giving it to my family as a loan with maybe a 1% payback interest, and all of the creative ways that the financial person is showing them how to shelter that money? Some are confused by saying, I think it is tax evasion to do that. Now,
No,
Alan.
no, not if it's following the rules that Rob just set out a few minutes
Yes.
ago, right? And so
Wow.
yes, there's loopholes in the law, right, that can
Mm-hmm.
be used to avoid legally paying taxes, and that's really where Rob and I come in, right? So we will only help clients legally
Mm-hmm.
avoid paying taxes. We don't help them
Wow.
evade taxes ever.
Wow. Wonderful. Pat Brown from Sovereign Staffing Solutions. She's the founder of that awesome agency. She says, great definition, Robert. I don't know if you guys are able to see the comments on the side as I am, but I think you
No.
might be able to. They're coming in. Thank you, Pat. Now, what are ways can someone going to work avoid taxation on their income? What are some ways? I know we can't go in a deep dive today, but at least on a high level, they're going to work, and how could they avoid taxation on their income?
Well, I mean, one way is like let's say you have a consulting business. So you sit
Yes.
down with your CPA and you really want to get educated by your CPA, and you ask them what type of deductions, what type of expenses are allowable and not allowable
Yeah.
for me for my business. Are there tax credits that I could take advantage of, like like research and development tax credit? Is that applicable for my business?
Wow.
It all depends. There's
Mm-hmm.
also ways of sheltering or deferring your income. For
Mm-hmm.
instance, you might be a taxpayer that's on an accrual basis, and a customer might prepay you. Do I pick that up as income now or pick it up in the future?
Mm-hmm.
Do I receive money? I'm receiving money in installments. When
Mm-hmm.
do I reflect, that to Uncle Sam? Over
Mm.
time and this year, you could create vehicles like retirement plans that also defer your income to the future and give you
Mm-hmm.
deductions now.
That is powerful. Alan, what do you say about that? Isn't that exciting?
That's very
That's
exciting. So,
unique.
I concur obviously with Rob, and so one of
Yes.
my areas of expertise is helping business owners create retirement plans, both for themselves and their employees. And as
Yes.
Rob said, the contributions to these qualified retirement plans, such as a 401k plan, probably the
Yes.
plan that
Yes.
most people are most familiar with,
Mm-hmm.
uh, the the money that's put into that is tax deferred. So you do
Mm-hmm.
eventually pay taxes when you take it out, but at least
Mm-hmm.
it grows tax
Mm-hmm.
deferred for a number of years. Uh,
Wonderful. Wonderful. Now, just by what Robert and Alan just shared, I don't know if our audience in hearing understands how closely both of them work in just that one area. Robert mentioned a list of ways. Alan picks up on the other end. So if you're working with both of them, how in God's name would you say you're paying all of your money in taxes? All right. The CPA knows but so much, like what Alan is sharing, and he is the law, so to speak, of knowing he is licensed to follow the law. But the government gives you the loopholes. That's why you see it as a game. Play the game and it's going to win. Okay. They give you the options there. So, working with these two, I can never continuously share with my clients, don't let me come into your company and you tell me you only have one and not the other. It tells me right up front where you are heading. Okay. And so thank you for sharing that.
Right. Well,
Now,
not to beat that to death, but that's why you need a team, right? Because no one profession
mhm,
area knows everything that there is
that's
to
it.
know, right? So while there's certainly some overlap in, say, Rob and I's
Yes.
knowledge and skill set,
Yes.
Rob knows taxes way better than I do. And while
Yes.
some CPAs may know how to uh, pick investments and manage them, not all do. And that's really where the
Mm-hmm.
expertise of a financial planner helps.
Mm-hmm. Yes, absolutely. Now we hear about this goes into a lot with Alan's area. Um, I want to hide my money on the stock market in all investment vehicles, the whole 9 yards, and let my
Right.
money go working for me. I want to dump it in real estate. And it means if
Right.
I do all these things, my money is working for me. And I assume that if my money is working for me, it's not a person. So Uncle Sam should not touch it.
Right.
Now tell me, is
Well,
that true?
unfortunately, that's not entirely true, but as we said, investments in qualified retirement plans such as 401k plans and IRAs are, for the most part, tax deferred. So you get a
Mm-hmm.
deduction from your income in the year in which you make the contribution, so it
Mm-hmm.
lowers your taxable income, and then
Mm-hmm.
that money continues to grow tax deferred until you decide to pull it out. For most people, that's in retirement,
Mm-hmm.
and not always the case, but in many cases, people have a lower tax bracket in retirement,
Mm-hmm.
so that even though it's getting taxed in retirement, it's hopefully getting taxed at a lower rate than it would have been today.
Mm-hmm. Wow.
That's certainly one way. There are other retirement plans that a business owner can potentially contribute to if they
Mm-hmm.
have the capacity to save more than a 401k will allow. That's one of the few downsides of a 401k plan. It has limits onto how much you can defer. And for those that currently in 2022, so for those that are under the age of 50, it's only
Mm-hmm.
$20,500.
Wow.
And if you're 50 or older, it's 27,000. So if you happen to be a business owner that has the capacity to save more than that, there are other retirement plans that you can add in addition to a 401k plan that might give you an ability to defer more taxes by saving more today. And it also prepares you better for retirement. That's the great thing.
That is what keeps me excited about business.
Right.
Is just to be able to wake up every day and play the game. I call it, it's the game, and find out ways of how to legally play the game and come out at the end wealthy and keeping the money for me to do the stewardship, that responsibility I need to create better impact in this world, right? Now, how does the role of one's thought process impact their decision on how they earn and manage money? Now, I do a class in the money mindset, coming from their parents and how their parents and their community think about money, think about investment, thinking about all of these things. And now bringing both of you as senior professionals in this market, I'm sure you wrestle with the mindset of a number of your clients. Can you tell me
Yes.
how does that impact their decision, their mindset on?
Well, everyone has an emotional relationship with money, right? Some positive, some not so positive, and it depends on their background, what their lifestyle was growing up. And that's a huge challenge for me always with clients, is not only finding the right investment and portfolio mix that's going to help them achieve their goals, but one that also matches their risk tolerance, right? So someone that is not very risk tolerant, if they were to invest in a very volatile, risky investment, they're not going to be comfortable with that because it doesn't meet their risk tolerance, and they're not probably going to stick with that investment long term. So when we have, say, a downturn in the market like we did at the outset of the pandemic, many people panicked and pulled their money out. And unfortunately, what happens is people tend to pull their money out of the market at the very bottom, and then they wait for it to come back, and that's when they get back in. And unfortunately, that's a huge mistake. Instead of riding it out, and that's probably the single biggest value add that I can give my clients, is holding their hands and guiding them through that, so
Yes.
that they don't make those mistakes.
So their heart won't fail them. They want to know, can I hold on to you? You promised me. That's why I like to put both of you in the cockpit of this vision, this imaginary tunnel. And they just have to trust the pilot and the co-pilot. And the ride is going to be rough. It's going to feel like the tube is going to break. It feels like the Uncle Sam is getting his teeth through it. Just trust your pilot and co-pilot in the front of this safe tube. They will take you through. I have one last question here before we ask our audience to pipe in if they have any questions as we're about getting ready to wind down. What are your parting advice for our audience desiring to grow their money and have it go to work for them?
I would say, if their dream is to open up and start their own business, and that's how they want to employ their money to grow for them, just go for that dream. Live that dream. That's going to be my advice. But get the wisdom of the experts on your side.
Yes.
To make wise decisions. Don't fall and watch out for the pitfalls, the alligators in your example.
Yes.
And think about maybe taking the course that stewardship is offering for the
Yes.
deeper dive.
Yes. Yes, absolutely. Thank you for those parting wise words, Robert. Alan?
Yeah, I completely agree with Rob, but I would add to that. I'm a big fan of Stephen Covey and his 7 habits, and his
Yes.
habit number 2 is begin with the end in mind. So
Yes.
for me, I want to know what the client's ultimate goal or goals are.
Yes.
So we've talked a lot about saving on taxes today, and that's great. But why? Like, what's the ultimate goal? Otherwise, it's a little bit of the tail wagging the dog. So I would want to know what my clients' goals are first, and then we can work out a plan that's the most tax efficient to help them achieve that goal, rather than just saying, I want to save the most money on taxes. Does that make sense?
Exactly. Oh, this is powerful. Oh my goodness. Now, I have Pat and Stephen and I'm sure there are others that might be on and they're the silent version, but this is your time to chime in with any question, any comments. Find us as we are winding down, and I'm going to share with you what happens next, but let's involve you. Any questions for Alan? Any questions for Robert before we say we let them out of the net right now, so to speak? And I know it takes some time for them to type. We know that. But while they're doing that, I must say, for our audience, this is just to give you an introduction to our awesome professionals here. What's going to happen next is that we are going to put out another invitation. It's going to be a webinar series, right? It's not going to be free. This is part is free, but part of training your mind about money is learning that you want to be able to have an even exchange. It's part of the exercise, the emotional exercise, that you learn to pay for the right knowledge that you need. Okay, that's your ROI on your investment. And so we want to take you through a webinar series, like a challenge. It's just an exercise for you to be able to sit in a cohort and really create your ultimate goal. As Alan says, let's start crafting that out. What does that end game look like? Oftentimes, you're not given that opportunity. You're given the opportunity to create a business plan, but the business plan does not necessarily force you into the ultimate lifestyle. We want to challenge you to think about 50, 60, 65, 70. God forbid you are not in good health. All of those things is actually where we want to challenge you for. Okay, so that's going to be the next one. And then after that program where you realize, oh my God, I really don't know, I need help, then you will enroll in the higher 4 to 6 weeks program where you are working in a cohort and you are drilling down, driving deep and working with that leverage, okay, with the CPA and the fiduciary working together with you through that process, so you have a solid plan that gives you the confidence to withstand a COVID shutdown and all of the other things that could possibly come up. You would have a strong confidence that you don't close your business, right? So let's see. No questions. Great information by Pat. And with Stephen, I hear you guys should be used in tandem. How flexible are you guys with payment for your services? Okay, Stephen. I know he's asking on behalf of his clients because he is a business consultant. So I assume he will sell you guys and then they're going to ask him that question. So he's asking on behalf of those.
Well, Mr. Setting, we got to eat, but
Good.
I would say that, when it comes to a startup, I'm a little more considerate, because they may be starting on a shoestring, and then they have the promise of growth. And when you're on that bandwagon, you grow with them. So sometimes fees could be in that fashion too.
Yes. Yes.
Yeah, similar for me. It really determines on the complexity of the client, right? And oftentimes a startup doesn't have as much complexity. It can, but it doesn't have as much complexity as a well-established business.
So the potential to earn money is really where they need to be. Okay, he says, I appreciate your honesty. I told you, you're only going to get that from my people. Okay, Stewardship Masters only give you honest advisors. So on that note, we want to thank all of our audience that's here. Those of you who have not yet commented, thank you. Feel free to comment later. This will stay up for some time before we put it back in the private room where you will understand more of how you're going to get access to some of it. So it's going to be up, given another week or so. All right. And I want to thank Robert Puerto and Alan Shoenberger for both of their awesome knowledge and, most important, their time. Okay, these gentlemen measure time. All right. So we are not taking their time for granted. Thank you so much for sharing, gentlemen, and letting our audience know that you are here and ready to move them forward into eternity with prosperity. Okay. All right. Bye, everybody.
Bye.
Bye-bye.